Have you ever seen kids in America set up a little table in front of their house and sell lemonade? A plastic table, a big jug, a handwritten sign, $1 lemonade. It looks cute. It looks harmless. But what if I told you that tiny lemonade stand is playing the same money game as the billionaires on Wall Street? Yeah, I'm serious. Let me show you. Imagine a kid named Jake. Jake wants to sell lemonade, but he doesn't have money for lemons. So he goes to his uncle and says, "Hey, can I borrow 20 bucks? I'll sell lemonade. We'll split the profit." Boom. That's not borrowing. That's investing. His uncle isn't giving him free money. He's taking a risk. If Jake wins, uncle wins. If Jake fails, uncle loses. Next problem. Jake needs plastic cups. He asks his mom for $10. "I'll pay you back this weekend. Plus $2 extra." That's debt. His mom doesn't care if Jake sells a lot or not. She only cares about one thing. Where's my money? Now think about it. Jake has investors, debt, pressure, responsibility. Sound familiar? That's a startup. A tiny one, but still a real business. Then Jake starts selling. First day, nobody comes. It's hot, but people walk past. No customers. Jake starts panicking. What if I lose money? What if I can't pay my mom back? Welcome to risk. Second day, packed. Neighbors stop by. Cars slow down. Everyone's thirsty. Sold out. Money everywhere. Jake is excited. Wait, is making money this easy? And that's the moment where most people get trapped because they only remember the win. They forget the loss. See what's happening here? No finance class, no business degree, just a lemonade stand. And inside it, you already see capital, loans, cash flow, risk, profit, everything, right there. The problem is, most adults in America are playing this game every single day without realizing it, with their jobs, with their credit cards, with their investments. And in the next chapter, I'm going to show you something crazy. Why some people sell a lot and still stay broke, while others sell less and quietly get rich. It all comes down to one question. Where does your money actually go after you make it? Here is an uncomfortable truth about money. Selling a lot does not mean you are rich. It sounds wrong, but it happens every day. From small lemonade stands to giant companies on Wall Street. Let us go back to Jake. After a few good days, Jake starts bragging, and quote, "I sold 200 cups today," and quote, $200. Sounds impressive. A kid making $200 in one day. But wait, making 200 does not mean keeping 200. Let me break it down. First, lemons, $40. Second, plastic cups, $20. Third, ice, sugar, water, $10. Then, his uncle, the investor, profit sharing. Then, his mom, the loan, with interest. Still not done. Jake wants to look professional, so he buys a new cart, $150, paid in monthly payments, $30 a month. Now think, $200 in revenue. After all that, how much is left? Maybe 50, sometimes less. But Jake does not see that. He only sees one thing, and quote, "I am selling a lot," and quote. This is the first trap. Revenue is not wealth. A lot of people fall into this. They say, and quote, "This company makes billions," and quote, "That shop sells thousands a day," and quote, "He runs a huge business," and quote. But nobody asks, and quote, "How much does he actually keep?" and quote. Some companies sell billions every year, and their bank account is empty. Why? Because the money is gone. Gone to debt, gone to salaries, gone to rent, gone to interest, gone to expansion. From the outside, it looks successful. Inside, they are drowning. This is called dying from success. The more you sell, the more you spend, the more pressure you have. Jake starts thinking, and quote, "I am doing great. Let me open another stand," and quote. So he hires friends, buys more supplies, borrows more money. Revenue goes up. Profit barely moves. Stress doubles. Now Jake is not just selling. He is worrying about paying debt, paying workers, paying investors, paying bills. He is no longer free. Money controls him. And here is what most people never realize. Not everyone who makes money controls money. Many people are owned by the money they earn. In the next chapter, I will show you something even scarier. Why smart people, educated people, people who know all this, still lose in the market, and why their biggest enemy is not Wall Street. It is themselves. Let me tell you something strange. Most people who lose money in investing are not stupid. They are smart. They are educated. They read books. They watch videos. They follow experts. And they still lose. On the same market. On the same charts. On the same streets of Wall Street. So what is going on? Why do intelligent people fail? In a game that looks so simple. Buy low. Sell high. Sounds easy. In real life, it is brutal. Let us go back to Jake. Jake is older now. He is not selling lemonade anymore. He is investing. Stocks. Crypto. Funds. Startups. At first, he is careful. He studies. He analyzes. He compares numbers. Then one day, a stock goes up fast. His friend texts him. End quote, bro. I just made 40%. End quote. Another friend posts screenshots. Social media is full of wins. Jake feels something. Pressure. Fear. Not fear of losing. Fear of missing out. So he buys. At the top. 2 weeks later. The price drops. 20%. Jake panics. End quote. What if it goes to zero? End quote. So he sells. Right at the bottom. A month later. The stock goes back up. Without him. That is mistake number one. Following the crowd. When everyone is excited. It is usually too late. When everyone is scared. It is usually too early to quit. But emotions do not care about logic. Next trap. Anchoring. Jake bought a stock at $100. Now it is 40. He thinks. End quote. It used to be 100. So 40 is cheap. End quote. Wrong. The market does not remember 100. Only Jake does. The stock is not cheap. It is broken. But Jake holds. Because he does not want to admit he was wrong. That is ego. Next trap. Overconfidence. Jake has 3 good traits. He feels smart. He feels special. End quote. I get this game now. End quote. So he trades more. Bigger positions. More risk. Less patience. He stops following rules. And the market punishes him. Hard. Then there is the biggest trap of all. Emotional accounting. Jake says. End quote. This is my safe money. End quote. End quote. This is my fun money. End quote. End quote. This is my gamble money. End quote. But money is money. It does not know categories. Loss is loss. But the brain lies to protect feelings. Here is the truth. The market is not fighting you. It does not hate you. It does not care about you. You are fighting yourself. Your fear. Your greed. Your pride. Your impatience. Most people do not lose. Because they lack knowledge. They lose. Because they cannot control their emotions. In the next chapter, I will show you how some people survive for decades, while others disappear in 5 years. Not because they are smarter, but because they play a different game. A quieter game. A slower game. A dangerous-looking game that actually keeps them alive. Now let me tell you a secret. The people who last in this market do not look impressive. They are not loud. They are not flashy. They are not posting screenshots every week. You will not see them bragging on social media. But year after year, they are still standing. While others disappear. While others quit. While others go broke. They survive. On the same streets of Wall Street. So what is their secret? It is simple. They play a different game. Most people play the fast game. Quick wins. Quick losses. Quick emotions. These people play the quiet game. Slow. Boring. Patient. At first, Jake does not understand this. He thinks slow is weak. He thinks patience is for losers. Then he meets someone older. A retired investor. No fancy clothes. No luxury car. No big talk. Just calm. The man shows Jake his account. 30 years. Up. Down. Crash. Recovery. Still growing. Still alive. He tells Jake. End quote. I never tried to be smart. I tried to be consistent. End quote. He explains 3 rules. Rule 1. Only buy strong businesses. Not hype. Not rumors. Real companies. Like Netflix, when it was building its platform. Or Nvidia, before everyone talked about AI. Back then, they looked risky. Today, they look obvious. Rule 2. Hold longer than feels comfortable. Most people sell when it gets boring. Winners hold when it gets boring. Because real growth is slow at first, then explosive. Rule 3. Protect your downside. Never bet everything. Never go all in. Survival comes first. Profit comes second. Jake learns about a legendary investor, Peter Lynch. He did not chase headlines. He studied businesses. He waited. He bought when things made sense. And he stayed. Not days. Years. Sometimes decades. Jake finally understands. This game is not about being right today. It is about being alive tomorrow. And next year, and 10 years from now, most people want excitement. The quiet players want freedom. Freedom from stress. Freedom from panic. Freedom from debt. They build slowly. They reinvest. They ignore noise. They respect risk. And something strange happens. Tom starts working for them. Money makes money, then makes more money. Not overnight, but inevitably. Jake changes. He trades less. He studies more. He sleeps better. He stops checking prices every hour. He stops chasing trends. He builds a system, a boring one, a powerful one. And one day he realizes he is no longer afraid of the market. He understands it, not perfectly, but enough. Here is the final truth. Finance is not magic. It is not gambling. It is not luck. It is a system that rewards patience, discipline, humility, consistency. Most people never master it, not because they cannot, because they will not. They want fast. This game rewards slow. So now the question is yours. Do you want excitement or freedom? Do you want stories or results? Because in this market, you can only choose one.